Hello, and welcome to the Signal or Noise Sneak Peek. In the next 2 minutes, you'll hear from our next Signal or Noise panel as we dissect what happens now that the first cut has been delivered by the world's most consequential central bank, the Federal Reserve. Here we go, team. The Fed has cut rates for the first time since the outbreak of COVID. Diana Mousina from AMP, how much is this a signal for Australian investors?
It's a signal for all investors, and Australia is included in that. Our share market normally moves with the US, but it's not a signal that the Reserve Bank should cut rates.
Okay, fair enough. Cameron McCormack of VanEck, what do you say? How big is this a signal for Australian investors?
Yeah, I certainly agree with Diana. I think it's a signal that we're moving to this broader easing cycle, and it definitely warrants, I think, in terms of portfolio positioning, particularly looking at asset classes that are more rate sensitive, like real estate, like infrastructure.
Yeah, absolutely. Sally Auld from JBWere, what do you say? How much is this a signal for Australian investors?
I reckon it's more noise than signal for Aussie investors, because the one thing we've learnt in the last 2 weeks is that we are on a very different rate trajectory here to the US, and so that should, all else equal, be reflected in slightly different equity market performance.
All right. Yes or no, panel? The Fed decided to cut rates by 50 basis points, as I think everybody knows by now. Was it the right decision? Cameron?
Yes, and I think Powell, positioned it quite well in his press conference. He said, don't expect this to be the trend, and I think that was appropriate.
All right. Sally, what do you say? Was it the right decision, yes or no?
Yes, it was the right decision.
Okay, you think it was the right decision. What do you say, Diana?
I'm going to say no, because I don't think that the data in the US warrants it wasn't an emergency cut, but it sort of feels like it might have been in the past. I know that Powell sort of said it was a recalibration, but in history, a 50 basis point cut is still on the larger side of normal. Yeah,
no, absolutely. Panel, third question. If you think this is a shallow rate cutting cycle that we're about to enter, what is one asset where you want to be positioned today? Sally?
Still pretty happy to be overweight small caps today.
Okay. Diana?
Overweight US equities makes sense to us.
Cameron?
I agree, small caps.
Okay. If you think this is a deep rate cutting cycle that we're about to enter into, what is one asset where you want to be overweight today? Cameron?
For me, it's gold. There's two tailwinds. Obviously, it benefits from falling interest rates, but there's also very strong central bank buying demand, particularly from emerging economies.
Yep, no, absolutely. Sally, what about you?
So I think if the Fed's in a really deep easing cycle, we're probably in a global recession. And in that case, I think we want to own fixed income, and probably the markets where their value is our own, Aussie bonds.
Okay. Diana, what about you?
I'll say long-dated government bonds.
Okay. In the US or in Australia?
Probably both, just because, as Sally said, a deep cutting cycle is usually associated with a pretty steep downturn or recession.
Okay, fair enough. Finally, Diana might have alluded to this already a little bit. The RBA says it won't be pressured into rate cuts just because the Fed has started. Diana, let's finish this off with you. Is it the right move, or is it a mistake they'll end up paying later?
It's the right move, because we have to set policy for what's happening in Australia. We didn't raise rates as much as the Fed, so even though our mortgage rates have actually increased more than what's happened in the US, that's sort of a bit different. I don't think the data right now justifies a near-term rate reduction, but we'll get there soon.
Fair enough. Cameron, what do you think?
I agree. It's what the RBA's positioning is, I guess, the right play. The dynamics in terms of the inflation pressures in Australia are a lot different to the US. Services inflation is a lot more persistent in Australia, and if you look at goods inflation, it's still, I guess, in the positive territory, whereas it's deflationary, say, in the US.
Okay. Sally, what about you?
Yeah, 100% the right decision. We've got less disinflation, better labour market outcomes. We've had a lower policy rate that's not really restrictive on many measures, so absolutely, hold the line.
And if you enjoyed that, you can join Sally Auld of JBWere, Cameron McCormack of VanEck, Diana Mousina of AMP, and yours truly, Hunsley of Livewire, for the next edition of Signal or Noise. Join us then.